Welcome to Bunnex Investment Group. In this video, we are going to be talking about trading level 2 like a professional. Level 2s are inevitable to catch if you understand everything that I'm going to show you in this particular video. Alright, so basically all market cycles starts at level 1. We know that the cycle or the market maker cycle will start with level 1 no matter the time frame. You may be looking at the H1, you may be looking at the H4 or even the daily and so forth. So understanding and validating the level 2 to trade gives you an edge and raise your accuracy. We are saying it's not every assumed level 2 that will be valid, but you need to know which level 2 to actually trade, and this is something that I'm going to show you within this video as well. So in this video I'm going to show you a method to trade the level 2 with high accuracy as well as objective. We do not want something that is subjective, but we want something that is objective, where you have clear rules for you to execute. But before we go any further, be sure to be part of the free Telegram channel. I'll leave the link in the description, and this is this Telegram name, Bunnex Investment Group. Just use the link in the description, join, and then you come back to finish off this video. All right, so basically the market maker cycle, as I've said earlier, it starts off with level 1 flow, and level 1 usually will be coming from a peak formation low or peak formation high, or even peak reset. This may be a reset, right, to give us a level 1, and then we have this level 1 impulse, which is this first level. So where we want to enter or where we want to take action is the start of the level 2. This particular point is what I am going to teach you to catch with high precision, have clear rules to follow, and trade it confidently. So you're basically asking yourself, why should we trade level 2? Why not 1 or level 3? So we are saying level 2 is a good point to obtain market structure. The market structure would have been pronounced, would have seen a clear break of structure, and the market would have given us a clue of where it is going to move next. The trend would have been set, and usually there will be no more retracements. So we are saying in level 1 there could be some consolidations. We know that at peak formation high, the market makers can actually present something like this, and you say sell, but they do this and actually take you out. So level 2 usually doesn't have a lot of retracements. There will be also institutional push, and it will be pronounced. We are saying the institutions would have actually put their big amounts of money on that particular trade, and the market will be actually pronounced in one particular direction. We also have small stop loss magnitudes. We are saying when you catch these level 2s, you do not actually think of something like this, which are stop hands. So usually the stop loss will be actually low, and let's now delve right into the strategy. All right, so basically this is the strategy description, and I've actually made it a pictorial view so that it will be easier to explain. The first thing that we are going to do is we start off with the higher time frame. It's actually starting off the higher time frame, get the bias, and then we switch to the lower time frame. So the higher time frame that we want to start off is the H4 time frame, and we will then switch to the H1 time frame. So on the H4 time frame, what we want to do is to see H4 level 2. Right, we can see this particular H4 level 2 being this particular flow, and then we switch to the H1 time frame, where this particular point that I've circled would look like this on the H1 time frame. So when you get this particular H4 level 2, you are now ready to trade H1 level 2. But I understand that you might be asking, how do we see this with clear rules? Let me explain. All right, so to simplify how you will map this in your mind, which is very important, a strategy is required to be mapped within your mind. It should be seen clearly within your mind for you to apply it. So to simplify how you are going to map this, you need to remember that the goal is to trade off H4 level 2, then drop to H1 level 2. So say I am going to trade H4 level 2, then after that trading off H4 level 2, that is the initiation of level 2, and then you switch down to the H4 H1 level 2 like that. So to simplify how you see H4 level 2 initiation, would need two common indicators, which are 13 and 50, which are the indicators that I always use on this channel. So when 13 and 50 cross and H4 retest the 50, say 13 and 50 have crossed and H4 comes back to the 50 EMA, right? We now switch to the H1 time frame for the next steps, right? So in this particular case, we are saying H450 EMA is equal or is the same as the 200 EMA on H1 time frame. The 50 will be this EMA in blue and the 200 will be this one in white. So if we see the market give us a 50 EMA touch on the H4 time frame, it will be the same as a 200 touch on the H1 time frame, right? So to actually understand the next step, we are saying on the H1 we need to see a 1350 EMA cross after the point of 50 EMA touch on H4, right? On H1 1350 EMA cross, we need to see an impulse to the upside, and then we need to get an order block on this last candle before we create the second leg. So level 2 starts at second leg order block, right? So we can see the market went to the upside and then it came back to this particular point to give us this flow. I understand this may be difficult to understand or to grasp, and let us actually talk about this over some examples. But before we do so, entry is level 2 start, which is order block, as I've shown you, and I'll clearly show you these order blocks on the real charts. Then stop loss above or below the order block, target 2x risk. Let's now have examples. But before we dive into examples, check out our emotionless consistent EA or expert advisor, some would love to say forex robot, called Stophunter Pro EA. This robot took a deposit of $1,000 to $500,000 in 5 years. I've left the description in the link in the description box. You can get your copy for $249 once of payment for lifetime. Let's now get over the charts. All right, so I'm going to illustrate using gold, which is one of the most favorite pairs for a lot of traders. And what I've said is, on this particular pair, what we want to see is a 1350 EMA cross. We can see here there's a 1350, right? Another 1350 here, another 1350 crossover, which is a blue and red crosses here, another one here, another one here, and so forth. So to simplify the back test, or where we are going to be starting from, I'm just going to mark these particular points, which are these zones. We can see a retracement to the 50 here, and then here we can see a crossover, then a retracement to the 50 like that. So let's actually see these particular points. We've said after seeing a pullback to the 50, like in this particular instance on gold, if we see this pullback to the 50, it will be first point validated, or we would know that we are now in H4 level 2. So this is H4 level 1, start of this point, H4 level 2. We can see H4 level 1, start of this point, H4 level 2. So if we switch to the H1 time frame, we've said what we need to do is we need to see a 1350 as well, or again on the H1 time frame, which is this particular point. And after that, we can see this level going to the upside clearly. Let me zoom in. Going to the upside like that, which is level 1, and we've said we want level 2. We've said our entry is going to be on the order block before we create the second leg. So this last green candle is our order block, and on that particular order block, we want to actually see a tap of that particular zone. We can see a tap, and a candlestick reversal pattern. We can see the market actually came to that zone, gave us a bullish engulfing, and then it went to the upside basically like that. Right, let's have another example which we marked on H4. This is the second leg, and this is the point on H4, 50 EMA, and then the order block before second leg was formed is this last red candle, and on that last red candle, this is how it looked like. We can see the market went to the downside. This is level 1, and we've said we want to trade off level 2, and this is how it did. It came back to level 2, gave us a bearish engulfing pattern, and the market went to the downside. So we want to be trading off these level 2 flows only, not level 3 or anything else, if we are to focus on this particular trading strategy. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.